welcome back to the 𝗪𝗲𝗶𝗀 channel, where we discuss issues and trends facing the oil and gas industry. If you are new to the channel, kindly like, share, and subscribe to stay updated with the current trends. Once again, we have with us Pranav Kant, a veteran of the oil and gas industry and an expert on strategy and marketing. So before we start, congratulations, as your last week's suggestion on crude correction has come true.
Thank you. And it was important in the sense that, first and foremost, thanks to the research team at our 𝗪𝗲𝗶𝗀, which were really able to come up with very incisive analysis and the background. And this was bold in the sense that, contrary to what the nameplate institutions were suggesting, the oil prices to move to about 140 and even 150. So it feels happy that, yes, we were able to forecast it right. Thanks.
Yeah. All right. So starting off with my first question for you today, do you see any further weakness in the near future?
Currently, this round of decline, as we mentioned, was triggered by the inflationary concern and the larger concern that it could lead to stagflation in the US and European markets. Now, on the overall, the balance side of it, China demand does not seem to be improving as was earlier anticipated. So the concern of the China demand remains. So that is bearish onto the prices. Supplies, as we have been maintaining that the market supply situation is pretty well balanced, because what we are seeing post the Russia-Ukraine crisis is basically rerouting or the rebalancing of the supply chain side of it, which has had a fair bit of impact onto the upside, onto the market, because of the additional supply side cost involved. But right now, since we maintain that it is balanced, so our position is that it will continue to remain under pressure, the prices that is. And so from the current $113 for the Brent, we expect it to move within a very narrow band of $5 with more risk towards the downside.
Okay, so moving on to the next question. OPEC continues to produce less than its production target. However, Russia is expected to further boost output. What would be its effect on the market?
Yeah, that's a very interesting question, and thanks for that. So two things here, OPEC and OPEC Plus in Russia, because Russia is part of the OPEC Plus. So OPEC production has been consistently against its agreed quotas for the targets. So we do not see, at least till September, any major changes into that, while Russia's production data seems to be suggesting an upward move, which means Russia is producing more. Where there is a lot of reason behind that because of this rerouting of the supply chains for the crude oil we are referring to. So Russia stands to gain significantly by this increase in production, and it would continue to attempt to make every possible attempt to increase its production and boost it further. So we expect Russia production to continue its upward trend, much against what most analysts had anticipated in the recent months. And the OPEC production, we are not referring to OPEC Plus this time, the OPEC production to continue to be at current levels. So which would again mean that the supplies would be pretty evenly balanced, while the demand side risk currently would outweigh the supply side risk. So prices have more tendency towards downside with a limited upside potential.
Okay. So these were some really good insights that you shared with us today. Thank you for being here, and it was a pleasure talking to you.
Pleasure. Thanks.
Thank you all for watching. Kindly continue to show your support by liking and subscribing to the channel. Stay tuned for more.